If you are currently receiving Social Security benefits, I need you to stop whatever you are doing right now and stay with me for the next few minutes. Because here in June 2026, three significant financial changes are happening that directly affect your monthly payment, your tax situation, and your prescription drug expenses. Most seniors I speak with have either not heard about all three of these changes or have heard about them without understanding the one specific step needed to actually collect the full benefit. I am not discussing future possibilities. I am talking about real dollar amounts that are either already in your account or waiting to be claimed because one form was never filed or one number was never verified. For over a decade, I have studied retirement benefits, senior tax programs, and financial rules that affect older Americans every single year. Right now, in June 2026, the combination of these three changes for the right household can permanently add thousands of dollars annually to your net income. Before we begin, have you subscribed to this channel yet? If not, hit that subscribe button right now and turn on the notification bell. Social Security rules, Medicare guidelines, and senior tax laws change constantly. When they change, nobody sends you a letter explaining what it means for your situation. This channel covers every single update in plain language the moment it happens. If you are not subscribed, the next update that could put real money in your pocket will pass by without you ever knowing it existed. Subscribe now and let us get into these three changes together. Change 1. Your January deposit and the IRMAA recovery form. I want you to do something right now. Pull up your January 2026 Social Security deposit on your phone or bank statement, then find your December 2025 deposit. Look at both numbers side by side. What is the difference between them? For most seniors, that difference was not what they expected. Here is exactly why. The 2026 cost of living adjustment was announced as 2.8%. For the average recipient receiving $2,015 per month, that translated to a gross increase of approximately $56 per month. That was the headline number everyone was expecting to see in January. However, the Medicare Part B premium also increased at the same time, rising from $185 per month in 2025 to $222.90 in 2026. That is an increase of $17.90 per month. Because Part B premiums are automatically deducted from your Social Security payment before it reaches your bank account, that $17.90 came directly out of your cost of living adjustment before you saw a single dollar of it. Your actual net deposit increase was approximately $38.10 per month, not $56. The Part B premium rose at nearly 3.5 times the rate of the cost of living adjustment itself. That is the second highest Part B premium increase in program history. So while the headline said 2.8%, what most seniors actually experienced in their January deposit was closer to 1.9% after the Medicare deduction. Write your two numbers down right now. January 2026 minus December 2025. That difference is your real net adjustment. Keep that figure in mind as we continue. Now, here's something very few people explained when this premium increase was announced. There is a rule in Social Security law called the hold harmless provision. Under this rule, if you are enrolled in both Social Security and Medicare, and your Part B premium is automatically deducted from your check, your Part B premium increase in any given year cannot exceed your actual dollar cost of living increase. In plain terms, the Medicare premium cannot reduce your net Social Security payment below what you received the previous month. For approximately 1 million seniors whose individual cost of living dollar increase was smaller than the 17.90 premium increase, this protection was applied automatically. Their Part B premium increase was capped at exactly their cost of living dollar amount. If your benefit is on the smaller side and your 2.8% adjustment produced less than $17.90, you may have been protected by this provision. To confirm, compare your January deposit to December. If something looks off, call the Social Security Administration at 1-800-772-1213 and ask specifically whether the hold harmless provision was applied to your account for 2026. Now for the group where this matters most. If you are currently paying an IRMAA surcharge on your Medicare premium, the net impact of this cost of living adjustment was even smaller. IRMAA stands for Income Related Monthly Adjustment Amount. It is a surcharge Medicare adds to your standard Part B premium when your income 2 years prior exceeded certain thresholds. The first IRMAA tier in 2026 activates at modified adjusted gross income above $106,000 for a single filer, adding $81.10 per month on top of the standard $222.90. Higher tiers increase significantly from there. Here is the critical situation. Your 2026 IRMAA surcharge is based on your 2024 tax return. If your 2024 income was higher because you were still working, had a one-time income event, sold a property, or took a large retirement account distribution, you are paying a surcharge right now in June 2026, based on a financial picture that may no longer exist. That is money leaving your Social Security deposit every month for income you are no longer earning. Form SSA 44, available free at ssa.gov, allows you to report a qualifying life-changing event and request an immediate recalculation of your Medicare premium based on your current income rather than the 2024 figure. Retirement is specifically listed as a qualifying event. Reduction in work hours is listed. Loss of pension income is listed. Death of a spouse is listed. If any of these events occurred in 2024 or 2025, and your income dropped significantly as a result, filing the SSA 44 this week can eliminate a surcharge currently reducing your net monthly deposit by $81 to over $400 per month. Every month you do not file is a month of overpayment you cannot recover retroactively. Submit the form with supporting documentation in person at your local Social Security office or by certified mail. The premium recalculation typically takes effect within 60 to 90 days of submission. File it this week. Change 2. The senior bonus deduction on your 2025 tax return. This is the change I hear about most often from seniors who filed their 2025 return and have no idea whether they received it or not. If your preparer missed it, a refund with your name on it is sitting in the IRS system right now. The One Big Beautiful Bill Act created an additional federal tax deduction of $6,000 for every person who is 65 or older. For married couples where both spouses are 65 or older, that combined deduction is $12,000. This deduction applies to your 2025 tax return, the one most seniors filed earlier this spring. Here is what makes it different from anything that came before it. It stacks directly on top of your existing standard deduction and on top of the additional senior deduction already in the tax code. You do not have to choose between them. You do not need to itemize to claim it. It reduces your taxable income from the top down. The deduction phases out beginning at modified adjusted gross income of $75,000 for single filers and $150,000 for married couples. If your income falls below those thresholds, the full amount is yours. Now, here is the part most people explaining this deduction are getting wrong. The straightforward calculation shows a single senior in the 22% tax bracket saving $6,000 of taxable income saves $1,320 in federal tax. For a married couple in the same bracket, $12,000 of deduction saves $2,640. Those are real and meaningful numbers. But for many seniors, the actual benefit is considerably larger than those face value calculations suggest. The reason connects directly to the provisional income formula that determines how much of your Social Security benefit is federally taxable. Here is a specific example. You are a single filer. Your pension income is $18,000 per year. Your Social Security benefit is $18,000 per year. Your provisional income, which is your adjusted gross income plus tax-exempt interest plus 50% of your Social Security, comes to $27,000. That places you above the $25,000 single filer threshold where 50% of your Social Security becomes taxable. You are paying federal tax on $9,000 of your Social Security benefit. Now apply the $6,000 senior bonus deduction. Your adjusted gross income drops by $6,000. your provisional income falls to $21,000, which is below the $25,000 threshold. Your Social Security is now completely tax-free. The direct savings from the $6,000 deduction at 22% is $1,320. But eliminating tax on $9,000 of previously taxable Social Security at 22% saves an additional $1,980. Your total benefit from one $6,000 deduction is $3,300, more than twice the face value calculation. This multiplier effect applies to anyone near those provisional income thresholds. Here is what I need you to do today. Go find your 2025 federal tax return. It is either with your preparer, in your email if you used software, or available as a transcript at irs.gov using the free Get Transcript tool. Open it and look for the senior bonus deduction. It should appear as a $6,000 line item if you are single and over 65, or $12,000 if both spouses are over 65, showing as a separate reduction to your adjusted gross income. If you see it, your preparer did their job correctly. If you do not see it, call your preparer this week and ask specifically, was the enhanced senior deduction of $6,000 from the One Big Beautiful bill applied to my 2025 return? A preparer current on 2025 tax law will answer immediately and specifically. If the deduction was missed, the fix is Form 1040-X, the amended return form. The window to amend a 2025 return does not close until April 2029. But every month you wait is another month that refund sits in the IRS system instead of your bank account. One more connected action. If you are currently withholding federal income tax from your Social Security check using Form W-4V, recalculate your actual 2026 tax liability after applying the $6,000 senior bonus deduction. For many seniors, this deduction reduces their federal tax liability significantly, sometimes near zero. If your liability dropped but your withholding rate stayed the same, you are prepaying taxes every month that come back as a refund 12 months later. Adjust your W-4V now and keep that money in your monthly deposit where it belongs. Change. 3. The Medicare Part D out-of-pocket cap. This is the change that matters most specifically right now in June 2026. Before I explain it, think of one person in your life who is on Medicare and takes regular prescription medications. A parent, sibling, neighbor, or friend. Keep that person in mind as I walk through this, because by the end of this section you will know exactly what to tell them, and one conversation from you could save them hundreds or thousands of dollars before December 31st. Starting in 2025 and continuing in 2026, every Medicare Part D prescription drug plan and every Medicare Advantage plan that includes drug coverage has a firm annual cap on what you pay out of pocket for covered medications. In 2026, that cap is $2,100. Once you have spent $2,100 out of pocket on covered Part D drugs during the calendar year, your cost for every covered medication drops to zero for the rest of the year. Not reduced, not discounted. Zero. Your plan pays 100% of covered drug costs from that point through December 31st. Before this cap existed, seniors managing cancer, diabetes, rheumatoid arthritis, multiple sclerosis, or heart conditions could spend $8,000 or more annually out of pocket on prescriptions. In 2024, reaching catastrophic coverage required $8,000 of personal spending. In 2025, it dropped to $2,000. In 2026, it is $2,100. The protection that once required $8,000 now activates at $2,100. That is one of the most significant improvements to Medicare in decades. Your plan tracks your spending automatically. Once you cross $2,100, the pharmacy system recognizes it, and your cost drops to zero at the counter. Here is why I am specifically discussing this in June. The cap resets to zero every January 1st. Seniors taking higher cost medications for chronic conditions often reach the $2,100 threshold by April, May, or June. Right now at mid-year is precisely when a significant number of seniors have either already crossed the cap or are very close to it. And the problem I hear about constantly is that seniors who have already crossed the cap are still being charged at the pharmacy because they never checked. Do this today. Call your Part D plan using the member services number on the back of your insurance card and ask for your year-to-date out-of-pocket drug spending. That counts toward the $2,100 cap. Most plans also show this in the online member portal under your benefit summary. If you have already spent $2,100 on covered drugs this year, every covered prescription through December 31st should cost you nothing. Confirm that at your next pharmacy visit. If the pharmacy charges you after you have crossed the cap, call your plan that same day. Do not pay and dispute later. Your plan is required to resolve this, and any overpayment must be refunded to you. Here is a bonus piece most seniors have not been told. As part of Medicare drug price negotiations, the federal government negotiated lower prices for 10 specific high-cost medications, taking effect in 2026. These include Eliquis for blood clots and atrial fibrillation, Jardiance for diabetes and heart failure, Xarelto for blood clot prevention, Farxiga for heart failure and kidney disease, Entresto for heart failure, Enbrel for rheumatoid arthritis and psoriasis, Imbruvica for certain blood cancers, Januvia for type 2 diabetes, Stelara for Crohn's disease and psoriasis, and Fiasp and Novolog insulin formulations. If you take any of these medications, your out-of-pocket cost in 2026 may already be lower than 2025 because of these negotiated reductions. No action is required. It is already active at the pharmacy. One important distinction: the $2,100 cap applies to drugs covered under Part D. Medications administered in a doctor's office, infusion center, or clinical setting are typically billed under Medicare Part B and do not count toward your Part D cap. If you receive medications through infusion or in a medical facility, that spending exists outside the cap entirely. Before the final checklist, one more thing. If your income is below approximately $22,000 as a single person or $30,000 as a couple, there is a program most seniors in this range have never applied for that could eliminate most of your prescription drug costs entirely. It is called Extra Help. This federal program covers Medicare Part D premiums, deductibles, and most co-payments for qualifying seniors, often reducing prescriptions to $0 or just a few dollars, regardless of whether you have reached the $2,100 cap. Call the Social Security Administration at 1-800-772-1213 and ask specifically about the Extra Help program for Medicare prescription drug costs. You can also apply online at ssa.gov. There is no cost to apply and no downside to finding out. Your 3-number action checklist. Everything covered today comes down to 3 specific numbers. Check all 3 before this weekend's. Number 1 is your January 2026 Social Security deposit minus your December 2025 deposit. That is your real net cost of living adjustment. If it is significantly smaller than expected and you are paying an IRMAA surcharge based on 2024 income that no longer reflects your situation, download Form SSA-44 from ssa.gov this week, complete it with documentation, and submit it to your local Social Security office. The surcharge reduction begins within 60 to 90 days. Every month you wait is a month of overpayment you cannot recover. Number 2 is your 2025 federal tax return. Find it today and look specifically for the $6,000 senior bonus deduction, if single and over 65, or the $12,000 deduction, if both spouses are over 65. If it is there, you received the full benefit. If it is missing, call your preparer this week and ask specifically whether the enhanced senior deduction from the One Big Beautiful Bill was applied. If it was missed, file Form 104-0-X. The refund is waiting and will not come to you on its own. Number 3 is your year-to-date Part D drug spending. Call your plan today and ask for the exact figure that counts toward the $2,100 cap. If you have crossed $2,100, every covered prescription for the rest of 2026 costs you nothing. Confirm that at your next pharmacy visit. If you have not reached the cap yet, mark October 15th on your calendar as the start of Medicare open enrollment to compare 2027 plans at medicare.gov. 3 numbers. 30 minutes. That is all it takes to know exactly where you stand on all three changes and what action you need to take right now. None of these benefits notifies you when you are entitled to more money. None of them calls you. The system simply waits. The people who capture these benefits are the ones who knew which three numbers to check and check them before the window closed. You watch this entire video. You already know what most seniors do not. Now take action this week. Subscribe and turn on the notification bell if you have not already done so. Every month brings new changes to Social Security, Medicare, and senior tax rules that directly affect your income. This channel covers every single one in plain language before deadlines pass. And before you close this video, share it with one person in your life who is on Social Security or Medicare. One share from you might put real money back in their pocket this year. Money that is already theirs, sitting uncaptured, simply because nobody told them where to look. I will see you in the next one.